Hey guys, welcome back to another video, and today I'm here to talk about the current state of the market and where I think it's going over the next weeks, months, years. And yeah, so if you guys do enjoy this video, be sure to smash the like button, also subscribe to the channel. I really appreciate your guys' support. Let's get right into it. So we see the portfolio today is down $334. It sucks. We're down, 1.5K in the past week. We're up on the month, so that's good. But there has been, a slight bit of a downturn in the portfolio, and this is the same for the general stock market. If we check the SPY ETF, an index of top 500 companies, we see there is a slight correction. It's not a market correction yet. Don't get confused by my terminology, but it's a slight, drop. It's something that we haven't seen in a little bit. There's been a lot of downturn in the market, to say the least, and this is something that hasn't happened in a while in this bullish market. I mean, we look at the portfolio right here in the past year, we're up 61%. And there hasn't been many drops like this. So this is coming to be maybe one of the bigger drops, and that's what I'm here to talk about today. But I mean, if we look at this, my portfolio is pretty much just, a lot of different stocks that are basically AI centered, I guess. Technology based portfolio is probably my biggest holdings, but we see right here, the end of July into the beginning of August, we had a little bit of a downturn, but then great uprise, and then now we're looking like we might have that same size of a downturn. So this is what I want to show you guys to be ready for this. I think so. You hold cash? No, you invest. I think that a lot of people get this confused, because if I were to say, okay, like if I were to say right here, look at this in my portfolio. If in May I was like, okay, I'm going to hold cash, I'm not going to invest because the market's in a downturn right now, and then it starts rebounding, so I'm like, okay, I'm going to wait for it to drop again, and then it keeps rebounding and rebounding, and then it drops a little bit right here, then I'm like, oh, that's not enough, it needs to drop more. Then from that 20,000 I had, I got to 22.5 thousand in about a month. So if I didn't invest right there and I just kept my money in cash and waited for the next downturn, then it would have been pretty bad. That would have been, a lot of lost money, honestly. And, you see this in the S&P chart. If you look at, past 5 years, if you're waiting for downturns in the market or drops, dips to buy, it's not going to happen. Yeah, it is. But if you just hold and wait for the dip, if there is a dip, buy it. For sure, that's an indicator that you need to get into a stock. If you want to buy the stock anyways and the price is dipping, but the fundamentals on the company are still the same, that means for sure get into the stock. But you see the S&P 500, like if it, drops right here, or let's say it's rising right here, and then you're like, okay, I'm going to wait for it to drop. It's at 475, didn't drop enough. Okay, it didn't drop enough. You just keep waiting and waiting. And then eventually you have this drop. But at this point, you already missed out on so many gains that you would have just had right here already. So it doesn't even matter. So if you invest right here while it's, at an all-time high, it's at an all-time high right here, you invest at that point, then you're already, it's getting new all-time highs every day. The S&P 500 this past couple of months, it's been hitting new all-time highs. So we also look at other stocks like AMD. This is one that was timed pretty well by me. I'm not going to lie. I don't toot my own horn often, but AMD was definitely a well-timed buy, and that's why I bought the stock, was because it was a good time to buy it. I definitely do believe in the company as well, but I think, buying the stock at this price, given their fundamentals and given their company's financials, that mitigated my risk factor immensely. It definitely dropped a lot by investing at this price, So, getting AMD for around this 110 a share right here, it definitely dropped my risk factor, because, you see AMD, the lowest it went when we did have that little market drop was $78. So AMD did get pretty low, but that's the, peak low of the stock. So it didn't, it wasn't going to go much lower than that, or the company would have been the easiest buy of all time. So yeah, there's a lot of reasons that you shouldn't wait. That's one aspect of this, is it's all about time in the market, not timing the market. That's a very popular saying among investors, and very true. You just saw it right here firsthand. You can't try to time the market. If you do time the market, then great. You probably got lucky. But if you time a stock, that's different, I think. If you're timing a stock, it's a lot different, because you can buy stocks for cheaper. But I also wouldn't, you can't. There's a fine line between chasing a stock and then waiting for a stock to drop. So SoFi, if I were to, I mean, look at SoFi. This is a great example. If I were to say, okay, I'm not going to buy SoFi for $16, that's, an all-time high for the stock at this time is 18. So SoFi just passed 18. They're at 18.21. I'm not going to buy it. I'm chasing the company. I'm chasing the stock, and then they blow up. They're at 23 now. You would have been up a decent amount, a good amount percentage-wise. You missed out on a lot of gains from that. But then same thing goes for a falling stock. I mean, you buy it right here and you're like, okay, I think they're going to keep rising. This all-time high. They're going to reach a new one. And then you buy it at 18. And then, before you know it, SoFi's under $10. You lost 50%. So that's where it takes the, putting your emotions to the side, dollar cost averaging down. Okay, I still believe in SoFi stock. They have the same fundamentals. Their price dropped for no reason. I'm going to double down. I'm going to dollar cost average. Now I own SoFi at around $14, $13, and now it's 23. So you almost doubled your money. So that's why you need to have, discipline in these times of downturns in the market. I think that, this isn't going to last a long time. I think this is just a little, market's going up so fast, it needs to drop a little bit. That's just how it usually is. There's a lot of stocks that still are up on the day. I mean, some of my top, stocks that I think you should buy now, I talked about these in the last video, are Google. I mean, Google McDougal, like Jeremy Lafarbe says. He's very into it as well. I actually do agree with his viewpoints a lot on that, but I do think that Google actually has Waymo, which is going to propel this stock a lot higher than people think. So, let's watch that one for the future. I think that you guys are going to be pretty impressed with what that stock does. Cake, one I talked about in the last video, still a great buy. This is one that's, $62, but we see right here, this is another all-time high. I don't think you're chasing in this stock, and I think it's really easy to dollar cost average down. That's another thing. If you're investing in these market downturns, you need to be ready to invest more money. You need a dollar cost average down. You can't just invest and then forget, unless it's an ETF. If it's an ETF, then do that. But I mean, to actually make money in the stock market, make it a source of income, not just, a long-term investment, which at the end of the day, everything is, but you do want to be making money. The more money you can make, the better. But if you want to make more money, you need to dollar cost average down. You need to have a consistent income coming into your account. You need to have, more money than expenses. So you need to be net profiting from month to month. And let's say your net profit from month to month is $1,000 and you want to spend $500 on having fun and $200 on going out to eat. You have $300 a month to put in the stock market, which isn't, that's good. It's so relative. It depends on where you are in your life, how old you are, where you live, what your employment status is, what your family status is, who you need to support. There's so many things that, a financial advisor could help you with. I can't, but I think that there's a lot of things you need to take into consideration when it comes to investing into the stock market and realize that it's not for everyone. So I wish it was. I wish the stock market was for everyone, and I think that it can be for everyone. But you need to realize you can't let your emotions get the best of you, because that's honestly how I, lost a lot of my account in the beginning. You see, it kind of looks like a small blip in time now. I went from, let's see, that was at 12,800, and the money I've invested in here is about 15,000. So I lost 3,000 off the rip, and it was more at the time. I didn't have a lot in my account. I was down a good amount percentage wise. So that definitely was a rough loss. You see, it says only 13, but I think at the time it was around, 30 or 40. And that was right when, I was trading options. Options are good for the long term, I think, but short-term options are not the move. Sometimes I'll do them just for fun, but I mean, you guys got to know that that's not an investing strategy. It's just gambling. If I just have, $20 sitting around in my account, I might put it on a 0 DTE, maybe, just for the fun of it. But I mean, more often than not, probably not. I'm probably dollar cost averaging into a different position. But we see right here, my account dropped a good amount, but I had more money than expenses, and still do. But I mean, this time especially was very important, because while my account was dropping, I was dollar cost averaging into the stocks that were making my account drop, which I believed in still. It was just a rough time in the market, honestly. As we've seen from all of these graphs, it was just a rough time in the market around this early April 2025. So I invested in during this time, and then, I was benefited from dollar cost averaging down. And now, I'm investing in the same stocks. I'm dollar cost averaging up, which is fine. If you have a stock that you still believe in and you have it for a lower cost basis and your thoughts are the same on that company, definitely dollar cost average up. There's no reason not to. And this is easiest done in an ETF, which I've made videos about before. My favorite ETF is SCHG. This is a Schwab US Large Cap Growth ETF. You see right now it's $30, but this is one that, you know, over the past 5 years, over the all time, this company or this ETF has returned an average of 16.55%. Very hard to beat. No ETF has beat it, and if they have, they haven't done it consistently over a long period of time. So I very much do, you know, enjoy investing in SCHG, and I think that, you know, that's what's in my Roth. That's what I believe in, and you know, that's pretty much what I invest in as far as ETFs go. I do also have some VOO in other accounts, which I do think is another, you know, pretty similar to SCHG, one that I like a lot. I think that VOO is better than SPY only because of, you know, their low, what's it called, maintenance fee, sorry, expense ratio, that's what it is. So SPY, so you see they have a 0.03 expense ratio, which is so small you won't even notice it, but SPY's expense ratio is 3 times that at 0.09, and their returns are, I mean, they've been around for longer, but their returns are technically lower. So that's, you know, another reason that you should probably get into you know, not SPY, but this is a pretty good broad market, you know, top 500 companies to base everything off of what's going on in the market. So yeah, guys, that's all I have for today. I hope that this video did give you some knowledge. You know, it showed you that maybe even in a downturn, you know, economic downturn, the market's going down like it is a little bit right now. You need to stay strong. You can't let your emotions get the best of you and sell everything or buy everything, or, you know, you need to just stick to your investing thesis, stick to your strategy, and let it pan out how it's supposed to pan out. You know, I mean, if you believe in it and it's proven to work, then you can't get worried. You got to know, okay, this is what I'm going to do. I'm fine with these results. This is my risk. This is my reward. You assess that and you're happy with the results. You know, no matter what it is, you got to accept it and it's all going to be okay. So yeah, guys, I do appreciate you for watching. If you did enjoy this video, be sure to smash the like button. Also, subscribe to the channel. I'd very much appreciate it. We're nearing in on 400 subscribers, actually. So thank you guys so much. I'd love to hit that milestone with you. Catch you in the next one. Peace.